Most people spend their entire lives trapped in the same income bracket, believing that their paycheck is the ceiling of their financial potential. They work hard, stay loyal to their employers, and wonder why their bank account never seems to grow. But what if everything they believed about earning money was fundamentally wrong? The truth is that income is not fixed, and those who understand this simple principle are quietly building wealth while others remain stuck. The income upgrade strategy is not about working harder or longer hours. It is about making strategic decisions that compound over time, creating a financial transformation that seems almost impossible at first glance. While most people focus on cutting expenses and saving pennies, those who truly build wealth focus on something entirely different, systematically increasing how much money flows into their lives. This approach requires a shift in mindset, a willingness to invest in oneself, and the courage to step outside the traditional employment model that keeps millions of people financially stagnant. The concept is straightforward but rarely practiced. Instead of accepting a predetermined salary as the limit of earning potential, successful individuals treat their income as a variable they can control and optimize. They understand that every skill acquired, every relationship built, and every strategic move made can translate into higher earnings. This is not about get-rich-quick schemes or risky ventures. It is about building a deliberate, methodical approach to income growth that anyone can implement regardless of their current situation. Maximizing your current income potential. The foundation of any income upgrade strategy begins with maximizing earnings from existing employment. Too many professionals undervalue their contributions and never advocate for fair compensation. Research shows that employees who switch jobs experience salary increases averaging 10%, while those who stay with the same employer often see minimal raises despite years of service. This creates a significant gap between what people could earn and what they actually take home. The first step involves understanding market value. Professionals who research industry salary benchmarks and compare their compensation to similar roles often discover they are being underpaid. Armed with this knowledge, they can negotiate better terms or seek opportunities elsewhere. But negotiation is more than just asking for more money. It requires building a compelling case based on measurable achievements, documented contributions, and demonstrated value to the organization. Timing matters significantly in salary negotiations. The end of fiscal years after completing major projects or during performance reviews provide natural opportunities to discuss compensation. Successful negotiators come prepared with specific examples of how their work generated revenue, saved costs, or improved efficiency. They quantify their impact in numbers rather than vague descriptions, making it difficult for employers to dismiss their requests. Beyond negotiation, skill development creates leverage for higher pay. Employers increasingly value specialized expertise, particularly in areas experiencing rapid growth or talent shortages. Professionals who identify emerging skills in their industry and proactively acquire them position themselves as indispensable assets. This might involve earning certifications, completing advanced degrees, or mastering new technologies that competitors lack. The investment in education often pays for itself many times over through increased earning potential. Another overlooked aspect involves optimizing tax withholdings and utilizing employer benefits. Many workers receive large tax refunds each year, essentially giving the government an interest-free loan. By adjusting withholdings appropriately, they can increase monthly take-home pay. Similarly, employer benefits like health savings accounts, flexible spending accounts, and retirement matching programs effectively increase total compensation when fully utilized. These seemingly small adjustments accumulate into thousands of dollars annually. Building multiple income streams. While optimizing primary employment provides immediate gains, true financial transformation requires diversifying income sources. Relying on a single paycheck creates vulnerability and limits growth potential. Those who build wealth understand that multiple income streams provide both security and accelerated earnings growth. The goal is not to work multiple full-time jobs, but to strategically create revenue sources that complement existing employment. Freelancing represents one of the most accessible pathways to additional income. Professionals can monetize existing skills through platforms that connect freelancers with clients seeking specific expertise. A graphic designer might take evening projects, a data analyst could offer consulting services, or a writer might create content for businesses. The key is selecting work that aligns with current capabilities rather than requiring entirely new skill sets. This approach allows individuals to earn extra income without the steep learning curve of entering unfamiliar territory. The sharing economy has democratized income generation in unprecedented ways. Property owners can rent spare rooms to travelers, car owners can provide transportation services, and those with equipment or tools can lease them to others. These opportunities require minimal additional effort while generating passive or semi-passive income. The barrier to entry is low, and earnings can scale based on availability and demand. Digital products and content creation offer scalability that traditional employment cannot match. Creating online courses, writing ebooks, developing software tools, or building subscription-based content allows individuals to earn from the same work repeatedly. While initial creation requires significant time investment, the product continues generating revenue long after completion. This creates leverage where effort and income become disconnected, allowing earnings to grow without proportionally increasing working hours. Monetizing hobbies and passions provides both income and fulfillment. Someone skilled at photography can sell prints or offer portrait sessions. A fitness enthusiast might coach others or create workout programs. The advantage here is that the work does not feel like work, making it sustainable over long periods. Many successful businesses began as side projects that grew into primary income sources. Investing in long-term growth, the final component of an effective income upgrade strategy involves building assets that appreciate and generate returns over time. This shifts focus from active income, which requires ongoing effort, to passive income that works independently. While this approach requires capital and patience, the long-term impact dwarfs what can be achieved through labor alone. Stock market investing provides exposure to business growth without requiring direct involvement. Dividend-paying stocks generate quarterly income while potentially appreciating in value. Over decades, compound returns transform modest initial investments into substantial wealth. The key is consistency, starting early, and reinvesting earnings rather than spending them. Even small monthly contributions grow significantly when given enough time. Real estate investing offers tangible assets that appreciate while generating rental income. Property values historically increase over time, and rental payments can cover mortgage costs while building equity. This creates a dual benefit where the asset grows in value while producing cash flow. However, real estate requires larger upfront capital and comes with management responsibilities that some investors prefer to avoid. Business ownership and equity participation represent the highest potential returns, but also carry greater risk. Some professionals negotiate equity stakes in startups they join, potentially turning modest salaries into life-changing payouts if the company succeeds. Others start businesses themselves, building assets that can be sold or passed down. While most businesses fail, successful ones can generate returns that dwarf what employment alone could ever provide. Continuous learning and adaptation form the foundation of sustained income growth. Industries evolve, technologies emerge, and market demands shift constantly. Those who commit to lifelong learning maintain relevance and capitalize on new opportunities as they arise. This means reading widely, attending conferences, joining professional communities, and staying curious about developments in and beyond their field. The income upgrade strategy ultimately comes down to intentionality. Instead of passively accepting whatever income circumstances provide, it requires actively designing a financial future through deliberate choices. It means saying yes to opportunities that build skills and saying no to time wasters that provide no growth. It involves short-term sacrifices for long-term gains and continuous reinvestment in capabilities that increase earning power. Financial transformation does not happen overnight, and the path varies for each individual based on circumstances, skills, and goals. But the principle remains constant. Income is not fixed, and those who treat it as a variable they can influence will always outperform those who view it as predetermined. The question is not whether income can be upgraded, but whether individuals will take the necessary steps to make it happen. For those willing to invest in themselves, build strategically, and maintain focus over time, the income upgrade strategy provides a proven pathway from financial stagnation to prosperity.